have actually been dollar strength trades, and the indices have shown weakness in these types of events as well too. It's just occasionally we have a dollar correlation that isn't definitively negative, and a negative correlation. There's degrees of correlation with the U.S. dollar that affect the indices, but the cryptocurrencies have had a very ugly series of drawdowns around these massive every 4 year dollar type strength trades. And that is important to note that is currently going on right now. The dollar correlations that you see inside of the indices are in neutral on the indices. They're negative on the currencies, and they're negative on the commodities, with the exception of silver and Bitcoin. Silver is neutral and Bitcoin is in a positive correlation. When we're looking at the dollar inside of these absolutely massive monthly support levels, you drop down to the next smaller time frame on the weekly charts, and you'll see just a gigantic double bottom that we've rallied away from inside of support. This is market participants that are raising cash. And it is kind of a big deal, from the perspective of us being inside of an environment where there's going to be a headwind against anything that is priced in US dollars in general terms, right? There's degrees of it, there are correlations, of course, that we're always monitoring. But in general, when the dollar is going up, market participants perceive that risk assets are going down. And you can see here, this looks like a gigantic double bottom. It's a huge double bottom on the monthly, the weekly charts. As you go into the smaller time frames now, even the daily charts, we ran into long setups coming out of the 11th. The targets are still unfilled above us at the 98 560s. And then as we went into the end of last week, now going down to an hourly, you can see here this massive pullback that we were inside of on Sunday night and on Monday morning, and that we're rallying away from. And the dollar looks like it's about to break out here and trend to a profit target from the perspective of its bullish above lines in the sand here at the 97.99s. So we have a dollar strength trade, a euro weakness trade that is currently going on. And the euro is inversely correlated with this in a massive short setup. Those have been an incredibly technical part of our markets up until this point for this year. Let's go to our next leading indicator here, and that's Bank. Now, Bank did break through its long from lows of the year to highs of the year. There are variations of support on the longer term time frames, but we ran into a short setup and all the way halfway back short from highs here this morning, and we sold off from it. And now what are we running into? We're running into a long from lows. So what does Bank tell us right now? Bank is telling us that we're stuck between two opposing setups. There's no definitive trend here from the perspective of the financials. In our most recent price action, if we're looking at what we're actually running into as we're coming out of the daily doldrums, the financials are inside of a pullback here from lows to highs. And we were inside of this pullback yesterday, and we rallied away from it coming out of the 10:30 time frame. We're in another pullback now. This is mostly associated with the Russell, and the Russell is inside of a halfway back long for the week as well too. All of the indices actually are as well. If Bank were to defend this pullback in the intraday time frame, we would expect that the indices would rally with the financials giving the indices a spec. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.